You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, at least we hope, your favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. I was off most of last week running around at a bunch of conferences here in the Chicago area, including the big FIA, the Futures Industry Association Conference, as well as an interesting quant conference, the Princeton and University of Chicago Quant Conference. The latter one was really fun because it's great to see students from all over the globe pretty much coming in to really embrace finance and learn. And after coming from a big industry conference where everyone's kind of down and dire and things are terrible and things are awful, and then you go to a session like that and a conference like that where the students are young and eager and excited, it's a very refreshing, optimistic turn on the business. It's a good way to finish up a big conference week like that. So a lot of interesting stuff cooking there, as well as a lot of stuff cooking here on the old network and indeed on this program, all 300 plus episodes of the Option Block available for you guys on our archives. Of course, those are found over there at theoptionsinsider.com. You can also find them on iTunes or on Stitcher or wherever you find your favorite podcast program. Just type in the Option Block. You should be able to find it. Of course, you can also use our mobile app. We put it all in there for you. Make it really easy to have a one-stop shop to find Option Block as well as all the other dozen programs on our network, a grand total of 13. No shortage of options-oriented content for your listening pleasure. And of course, after you're listening, or maybe while you're listening, shoot us a question, shoot us a comment, shoot us your insight. We'd love to hear from you guys via Twitter, Facebook, email, even stock twits. We like you guys too. All you guys out there, send us your questions or comments. Of course, we baked it all into the mobile app as well. Make it really easy for you guys to engage with the program and let us know what's on top of your mind so we can, of course, dive into it here on the old program. Speaking of this program, I am joined today by my usual cast of characters, starting off with the man beaming in from Options Express by Charles Schwab, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the show, sir.
Good to be back, and as I've said so many times, the show is the high point of my day on many days, and it's certainly the high point today. We were busy here today, and surprisingly, it wasn't U.S. stocks so much that kept the desk busy. Today was all about China, and we'll talk about that in a little bit.
All right, and also joining us on the old program today, you know him, you love him, as Uncle Mike Tosaw from RCM Wealth Advisors. Of course, Uncle Mike, welcome back to the show, sir.
Always happy to be here and not in a dental chair with stuff being shoved down my mouth.
Yes, I think that would help. Most people would choose this show over dental surgery. So there you go. At least we outrank that.
Absolutely.
Horribly painful dental work or listening to the option block. I will choose the latter. Thank you.
If I was Sebastian, there was just so many wrong ways to go with that one. But I'm not, so I'll let it pass.
Thankfully, you are not. You are indeed the Rock Lobster, Mr. Andrew Giovinazzi. Did an able job holding down the fort last week in spite of the myriad weather troubles you guys have up there in the hinterlands, the Pictus wilderness known as Maine. So well done, sir. I doff my virtual cap to you. Hopefully, everything is right now. You have power back and the outhouses are working again.
We do. The good thing about the outhouses is they don't need a lot of power.
That's true. Not a lot of running water in the old outhouse.
Yeah, it's no real problem, and then you only go in the daytime because that's when it's light. So you don't need a light in there either. So it really is helpful. There's those little cuts in the doors that are in the shape of a moon. That's so the moon beams can get in and light it at night. They thought all about it in Maine about the outhouses. Lots of fun there. And I had Alex on Thursday.
What better? You and the Viceroy diving in for a full hour's worth of option blocking. That's scintillating stuff.
We could have gone for 2 hours. He was on a roll.
Wind Alex up, and that's all he needs, and he could just keep running. And we're going to keep on running, listeners. With the show, it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you know what this portion of the show is all about. It's time to dive into what caught our eye, what was moving on the old street today. Wasn't a heck of a lot. Certainly wasn't the wild roller coaster type session we become accustomed to throughout the month of October. We're a little bit more staid, a little bit more steadfast these days. Most of the major indices up about 1/4 of a percentage point or so. So about almost 5 handles on the S&Ps, about 30 on the Dow, and just a fraction of a point on the old Qs. VIX cash ticking off a little bit to the downside, down nearly 0.5 point to about 1270 on the day. And that's pretty much the lion's share of what we saw going on for most of the day. We've already gone through the vast majority of earnings season, so only a few handful of stalwarts or stragglers, you might say, left, including Uncle Mike's favorite, CSCO. We'll get to that in a little bit. Maybe we'll start there because, Uncle Mike, you had to miss the last episode, and you had such fun stuff to go through. We'll give you the joy of having pride of place on the old trading block today. What indeed caught your mind in today's activity? What caught your eye? And, of course, you can get in a little bit of last week, too, because you missed those last few episodes.
Well, now that you mentioned CSCO, I think I might want to go back to the dental chair now that you did that to me. But nonetheless, just in looking at over the course of the last week, elections, I think, were the biggest news for the non-farm payrolls on Friday. It was the market did come up, but it really wasn't like a 20 or 30-point mover in the S&P by any means. So I think that the elections were, well, I don't think. The elections were obviously the big news of the week. It really didn't seem to be much of a surprise. We are seeing, and I'm going to steal Alex's thunder here, I'm guessing, looking at the TLT, looking at the bonds coming down a little bit today. The TLT is just kind of one with which I'm looking at. Just keeps kind of tinkering around that 120 level, and curious to see if it's going to make a major breakthrough or really start to come down in a hard and major way. Gold, I'm going to talk a little bit on the strategy block about some things that I'm doing with gold, so I'm going to kind of hold off on that for right now. But gold did go up on Friday, and then now it came right back down today. And I will give us a little bit of a teaser. It does go along the lines of doing stuff. And Apple, kind of boring today, down 18 cents. And then I will finish with my favorite thing to say on the show. There's never been a better time in the history of the entire stock market to sell your S&P positions than right now.
Yes, so you're right, Uncle Mike. It is indeed the best time, at least in recent memory, going back a couple months now, to sell some S&Ps closing at 2,037 on the big mothership. So well north of that sticky strike, that 2,000 level strike that we stayed glued at for so long and then dipped so far precariously below and now have since rallied north of. So still paying attention here, but of course, if you're on the Uncle Mike train, then perhaps not a bad time to be selling off some portions of that broad index portfolio. Mr. Andrew, I know you did a lot of chatting last week, a lot of shows under your belt last week, but what caught your eye in today's activity, sir?
It will be the subject of my blog today. Besides the BABA, they have like something much bigger than Black Friday or Black Tuesday or whatever we have in the U.S. They've got like Singles Day or something, like where everybody sells. There's like huge commerce done on one day or something in China. I guess today, moving forward toward tomorrow. I think that's part of the volatility bump in BABA today. Besides everybody wanting to own it, because I guess it's the biggest retailer in China, and that's a pretty big place. But what I thought with vol coming in like it is kind of the destruction of the upside, volatility, a lot of just selling, vol getting crushed, and it's brought the VIX down to the 12 handle. Now, like, what was it? 3 weeks ago, it was in the 30 handle, and now it's 12. So everybody, note to self. You get in bad trouble when you sell volatility at 12.5 and it goes to 30. And we are now back there again. And a lot of just total upside destruction and volatility. So I don't think, whatever is going to power us up, I feel will now be powering us up very slowly. And that really, besides a lot of action, we talked a little bit in the chat today about natural gas this morning. Just there's some fears about a redo of the polar vortex of last winter. So we were looking at some trade ideas there. But, for the most part, stocks are kind of up to mixed, and they hate the vol, they hate gold, they hate treasury. So all the stuff that they used to like, they don't like right now. Imagine that.
Imagine that indeed. And you're right, the big BABA bump here on Singles Day. You have to love it. It's a day that kind of goes a little bit deeper than our Valentine's Day here on the States. Here you just buy a card and some candles. Apparently over there you celebrate and or lament your single status by apparently buying a large amount of goods. That seems to be the way they do it over there, because I think they said Alibaba did about $5 billion in sales last year. So we'll see if they $5.8 billion on November 11th last year alone. So we'll see if they can top that this year. But that certainly puts into perspective things like we have in the States, like Black Friday and Cyber Monday and all these other little made-up retail-oriented holidays. Apparently the singles over there drown their sorrows in goods, not chocolates and other fun stuff. So that's pretty interesting stuff. Speaking of interesting stuff, Mr. Alex, Mr. Viceroy, take us home. What caught your eye over there at OX by Charles Schwab today?
Well, Andrew touched on two of the threads, and one was China, and the BABA number, I think, that surprised everybody was they did $1 billion in 17 minutes, which is the number that was, when I saw the headlines today, the $1 billion in 17 minutes number, I immediately had to go look at what Singles Day was, and I think all of us kind of had the same reaction, like, what is this? And I guess functionally it's the equivalent of their Black Friday. It's the big retailing day, and to your point, Mark, billions will get done, but $1 billion in 17 minutes, you think about that from a retail standpoint. You also think about it from a server farm standpoint and the power of the servers, and how do those servers not come down? Ironically, one of my buddies at a hedge fund today said, if they can do $1 billion in 17 minutes, then you got to start buying servers, and you got to start buying Amazon. And Amazon was up $5 today as well. But I don't know if there's a cause and effect. Baidu was up $11 today as well. So I don't know if that relates to Singles Day or the amount of traffic. The other big announcement today was that China is going to open up their markets to foreign investment, which I think was a tailwind to the Baidu and Alibaba news. The other theme here, and Andrew talked about natural gas. Grigas pointed out today that he thought there was bottom fishing amongst the OX customer base in the energies, and that's both in the futures and the futures options, but also in the stocks and the options on the stock. So it was everything from put selling to outright futures purchases on the crude contract. Another name that Griga said we had a lot of traffic in today was a lot of bullish paper in Love, in Southwest Air. And he said it's the airlines have been somewhat hot lately because of the cheap energy, but he said it's kind of a surprising name to see the kind of traffic we saw in Love today. And of course, when John says that, I immediately start, looking for the story, the merger takeover, and I didn't see anything today. But three themes today. Well, I think energy and airlines, maybe I should qualify as one theme. But the other theme today was China.
Yeah, Love having a decently busy day, not as robust as some recent sessions. It's been averaging close to 12,000 contracts a day, doing a little over 10 today. So light on the overall volume, but perhaps a disproportionate share of that going over up on the OX platform today. And Baba, of course, doing some serious numbers, not just from an overall sales perspective, but also from an options perspective. They've been averaging about 140,000 contracts a day, which is fairly decent. I think most names would kill for that type of ADV, doing 1,000 over 500,000 contracts today. So Baba just lighting it up. The stock also up about 4% today to 119 on the day. So Baba just lighting it up with singles day here. A lot of people having their eyes opened to the various nuances of the domestic Chinese economy. And if you're playing Baba, you're playing Yahoo these days. That certainly is a big, big factor. If you look in here, Nova 120 is going up 25,000 times today. So a lot of love, a lot of just every strike across the board. Of course, when you got 500,000 contracts going up, that's not exactly surprising. A couple thousand, 2,000, 3,000, 4,000, pretty much on almost every strike across the board in the Nova weeklies, and decent similar paper out in the Nova monthlies as well. 10,000 of the Nova 115s going up. So lots, just a lion's share, a ton of paper out here in Baba really to parse. And speaking of parse and paper, I think it's about that time to dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, you know the drill by now. You know what that funky tune means. It is time once again for the odd block, the portion of the show where we break down the weird, the wild, the interesting, the chin-scratching, head-scratching, sometimes just downright bizarre paper that we're seeing lighten up the old tape today. We mentioned Baba really lighting it up, but it wasn't the only one catching our eye today. Not by a long shot. Of course, a lot of these names didn't do the amount of paper that Baba did, but there are a few that do. But we'll kick things off with another player in the broad E as well as brick and mortar commerce space, mostly on the domestic front, but they have some international forays as well. This is, of course, Wal-Mart. WMT is the ticker, closing today right around 79.5 or so, up about 1% on the day. And this is the name that lately has been doing about 21,000 contracts a day. So put that in perspective, about 1/7 of the ADV of Baba out there, and doing about 90, almost 95,000 contracts today. So a very, very robust day for Walmart. Of course, 1/5 of the overall options volume of Baba again, but still a very, very busy day for good old Walmart. What we saw, what caught our eye out here was this morning, at least, a big chunk, to use the technical term, one large block of the Jan 2015 82 half calls going up for 64 cents. It went up mid-market, so this is where we get into the head-scratching portion of the show. Was it a buy? Was it a sell? Looking at the implied vol here on this strike, this implied vol is shooting up quite a bit. So from about a 13 a few sessions back ago to a 15 now. So that certainly does appear that this was indeed an opening buy. Just about 9,500 contracts open on this strike. So clearly opening paper, no matter which way you cut it, if it was a buy or a sell. Looks like more went up as the session progressed to the tune of about 2x. Nearly 34,000 of these Jan 82 halves going up. The first batch went up for 64 cents. The other batch went up for somewhere between there and about where they closed out at about 75 cents. So somewhere in that range. For a while there, they were 80-cent bid going up today, so they were looking pretty good in the middle of the session. They come off a little bit since then, but still, if this is as it appears to be on the surface, this is just a size opening upside buy here in Walmart. Not that far upside, actually. Only about just a little over 3 handles out of the money, these calls. Then this could bode well for, of course, someone leaning on holiday sales here for Walmart. Earnings are on the 13th, which is coming up later this week, so this isn't a straight-up earnings play. This is probably definitely more of a holiday sales type play. Mr. Rock Lobster, what say you? A, do you agree? Do you think this guy was buying? And B, what do you think of our friend here gobbling up, if he is buying, so much upside in Walmart?
You know, this was one I looked at it. Okay, you're gobbling the upside. You've got earnings coming out. I did a little more digging since I posted this. I believe there could be some stock against this, but there wasn't anything when I put this up. When I looked at it, I don't think the stock print had hit the tape yet.
Why would it? Why would they make it easy for us?
Yeah, exactly. For whatever reason. Because there had been a print that went up, and then they took it down, and they changed the volume. And, you know, doing the delta calculation, there's about the delta on those calls around 14. There's about 270,000 shares that went up. So it's probably a delta neutral trade out till January that the trader put on. So that's like only a 14 delta. Kind of one of the nice things about a low volatility stock is you get an awful lot of option contracts for your delta when the vol's real low like that, when it's just out of the money. So I would say it's a gammalicious trade. I believe they're buying calls, selling stock, and looking for Walmart to do something possibly Baba-esquian, as it were. Baba-esquian, that's a new word.
Yeah, they don't want it to go anywhere except for stay here. It's like the old bouncer, right? You don't have to leave, or you have to leave, but you just can't stay here. They want it to just move. They want this thing to move fairly heartily and handily post holidays. And mid-Jan, that should give us some time frame to look back on the holiday sales and see how they've done. So clearly someone expecting some vol movement, if nothing less.
And all-time highs. I mean, if Alibaba can be that big, I don't know, what are even the ratio of dollars on those two things? I'll bet you Alibaba has a larger market cap than Walmart now.
I think they passed them recently. I think that was a headline a week or two ago that they passed them already, I think. So, yeah, if not, they're very much in that conversation.
Yeah, I mean, what is it, a 10-year-old company? Pretty amazing. Just saying. But anyway, they're looking for Walmart to move and, potentially make new highs, new all-time highs.
All right, speaking of highs, we also have some interesting positioning going on out here. These are more at the money, though, which is kind of interesting in and of itself. We're going to move on to a completely different sector. We talked enough about retail. Going to move on into a sector we don't talk about a lot here on the old Odd Block. This is movie studios and films. We don't see a lot of upside or any kind of activity, really, in these big studios that would certainly qualify as unusual, but we're flipping that script, pun intended, today on Lionsgate Entertainment today, ticker symbol LGF. This is, of course, a maker of a lot of films you may have seen. I get them confused with Legendary all the time, but they make some of the same kind of movies, so I don't think that's too much of a leap. This is the name that does about 1,500 contracts a day from an options perspective. Doing about 22,000 today, I should mention, by the way, closing today. $35 and a nickel, up about 5% or about $1.60 on the day, so pretty bullish day here for good old LGF. And what do we see out here in LGF? Well, not surprisingly, given the fact that we saw a pretty good pop in the underlying, we saw people piling in to the calls. In particular, it was the NOV 35s. When this day started, those were fairly decent out-of-the-money calls. As the session ended, they were pretty much exactly at the money call. So we saw a nice little rally, a nice little pop here in good old LGF. In particular, these NOV 35s, when we saw them this morning, again, for one block, went up 1,825 times. Paper buying for 80 cents. As the day wore on, as the underlying rallied on, those calls got bid up. They went out at $1.15, and quite a few more piled in after the fact to the tune of nearly 10,000, 9,564 going up on this strike. on open interest of just a hair over 800 here. So clearly open in paper. People are just loving the heck out of these formerly out of the money, now at the money calls here in Lionsgate. I don't really know what the upcoming schedule is for Lionsgate or what they have on the horizon that could make someone perhaps be so enthusiastic about the future here of some upside in Lionsgate. I also don't know if we saw any stock with these, but either way, this is an interesting one. And just for the sake of diving into a new sector, we don't talk about unusual trading in the movies that much, Mr. Rock Lobster, and that alone, I think, is worthy of some unusual consideration. So what's your take here on our friend piling into some now at the money here in Lionsgate?
Maybe did they do Hobbit movies or like Freddy Krueger movies? I can't remember.
Warner Brothers does Hobbit,
like
I believe. It used to be New Line.
What do they do?
I don't know if they do the Hobbit quite. I don't think they do. It might be Universal. One of those two. I will look it up while you analyze, sir.
Yes. I think straight call buy, did not see any stock. Kind of smells to me like a newsletter type trade. You know, buy Lionsgate, buy the No 35s. They're really cheap. Vol's 42%. And just given the $1.50 move today, the at the money calls were at 80 cents, weren't too expensive. So, you always like buying those calls and have them in the money the first day. So at least the buyers got that. And I think we have just some good old-fashioned buy and spec because stock made a 52-week high. Maybe they're selling movies on the Alibaba website. Who knows? But it's definitely going up. I just dug it up.
They have the other demographic. They have the tween girls. They have the Hunger Games coming out later this year. So that's what it is. So this, our friend here, putting a lot of money on the power of tween girls to flock into the theaters, which I guess, given recent history with that franchise, I guess isn't that bad of a bet. Let me pull up here the stock while we're talking and see. I think it's not like it's been an upward trajectory ever since these Hunger Games have been coming out. We've got a peak last year, towards the end of last year, actually about this time, October, November, of about 37, almost 37.5 or so. And that was pretty much about it. It kind of vacillated to the downside into the mid-20s, and now it seems to be slowly rallying back to that level. So something seemed to clip it a bit over that period, and maybe this guy's betting that the Hunger Games are the thing that's going to turn it around. But you're right, I kind of agree. This has some of the hallmarks of a newsletter. A decent block going up early. That's, of course, the newsletter writer front-running his own customers. And then the rest of the paper coming in scattered throughout the day. I need 10 of these for my grandmother in Iowa, et cetera, et cetera. And just buying them willy-nilly, regardless of price, regardless of premium. Always a fun thing to see these people. Gotta love the big chunk that goes up first. That's what I love the most.
And I know, and I think with the movie stocks, you sort of, you buy them when they don't have anything released, and then you sell them when they announce something big, because then they kind of load all the potential in there, and everybody gets real excited, and then they already bid the stock up to whatever the amount of money is that they're going to make on the whole thing. So, but yes, this is feeling like it's a 52-week high at least. It's not an all-time high to get Tosaw excited, but it is a 52-week high.
Yeah, and it has a nice retail-friendly hook. Hey, the Hunger Games is coming out. Make some money on the Hunger Games. I think anyone that's been around knows, like you said, Andrew, how these movie pitches have worked out in the past. Everyone loads up expecting some big summer tentpole movie to really move some studio stock. Then they have 15 underperforming films, and the Hollywood accounting eats up all the money, and it's all gone. And the stock takes a blip down $1.50 instead of going up. So more power to these folks. Let's hope it works out for them. Sounds like for the newsletter guy, it's already working out. He's up on his calls already. So he's a happy fellow. That's what happens when you front run your own clientele. All right, moving on to our final name. This certainly falls into a lot of our odd block categories here. Cheap, weird name, all of the above. It's all encapsulated in his last name here. This is Hovnanian Enterprises, Inc., ticker symbol HOV, not the high occupancy vehicle lane, no, just HOV, excuse me. Trading today, closing just a hair under $4, $3.95. This is the name that was up. Decent day for this name, up about 18 cents or nearly 5% on the day. And what we saw here today was pretty much a little bit of a longer term play. Got to pull up the old Feb expiration cycle to pull it up. And once again, we have a similar refrain to what we were just talking about. Some very, very formerly out of the money, now at the money, essentially, calls being gobbled up for some decent size. When we started it this morning, we started profiling these calls, we saw about 1,500 of these Feb 4s going up for 40 cents, paper buying. As the day has progressed, we've seen that number swell to a total of about 7,000, about 300 or so contracts piling into the strike on open interest of just 1/10 of that, 730 contracts open on the strike. So clearly a lot of open and paper going up here in the Feb 4s. Again, this one looking like someone is really, really swinging for the fences here on a decent pop. This name, I really can't tell what the heck this does with this name, so I'm going to dig in a little bit. Looks like they construct, market, and sell single-family detached homes and townhomes and condominiums. Well, have you been around? It sounds like they also focus in the urban environment. Anyone who's been around big cities knows of late that the urban areas are starting to catch fire from a real estate perspective. Maybe this guy deciding that there's something at play here. There is a decent spot of open interest here. The Feb 4 halves are open, nearly 11,000 contracts on that strike. Pretty much one of the largest open strikes around, except for the Jan 2015 Jan 7s that are open for about 18,000 contracts. So there's a few large strikes floating around out here. The rest of the strikes are pretty much haven't had much interest at all. So we'll see how this one comes to pass. In the meantime, Mr. Rock Lobster, take us home. What's your take on our friend here, Mr. High Occupancy Vehicle?
High Occupancy Vehicle Enterprises. Again, I think it's not probably the same newsletter guy. Just buying calls. It's a bull market, man. So options level bull market. So, out to February, 40 cents does not seem outrageously expensive for an upside call in here. I remember actually trading this stock many years ago when it was like $60 or something like that. When it was the home builders were, all the rage and they were making money hand over fist. It has since been brought low. But yeah, I think just aggressive call buying in a low price stock. And maybe it's time for Hovnanian Enterprises to become a double-digit wonder again. So a lot of the home builders are sort of bouncing. There was some good news on Toll Brothers today, I believe. Their earnings were decent. So, maybe a little trying to ride the wave, as it were. Get long some Hovnanian.
It just sounds right. The Hovnanian. I like it. It's an interesting one. Yeah, you're right. It has been felled, legs cut out, if you will. It was trading 7 not that long ago, towards the beginning of this year, actually. It's been cut in half from there and, of course, has fallen mightily from those levels you were talking about a few years back in the 50 to 60 range. So you're right. Clearly, the home builders have fallen off a lot of people's radar. Perhaps it is time for that viewpoint to change. Either that or our friend, Mr. Newsletter Writer, is just finding another nice call to recommend the lemmings pile into. Either way, we'll keep an eye on both of these, let you know how they work out. Meanwhile, we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's cooking, what's catching the Viceroy's eye over there in the land known as Options Express by Charles Schwab. And Alex, you gave us a little bit of a taste at the top of the show, but what else was cooking? What else was going on? What else caught your eye over there at OX today?
Well, one extended conversation we've had is tax season and coming into tax season and tax reporting and wash sales and preparing for it. And I know in the options industry, not exclusively at OX, but with kind of everybody, this becomes kind of a busy time when people start looking at harvesting losses and what they can do to possibly do some tax-efficient trading. And I know I've raised the topic. I'm not going to give hard tax advice. I just want to tell everybody who listens to the podcast to start thinking about tax-efficient trading as we go into November here. The 31-day rule for wash sales about replacing a position. If you've got positions that are down and you're thinking about doing some tax harvesting, visit the tax center here at OX. If you're a Schwab customer, there's tax resources on the Schwab platforms. But it's just getting to be timely to think about how you may want to adjust, how you may want to harvest. Keep in mind that tax harvesting isn't only an issue with stocks and options. It's true with the ETF community and some of the fixed income products. So I just want to plant the seed to start thinking about what you might want to be doing, how you may want to be repositioning, how you may want to be harvesting a tax loss going into the last 6 weeks here of the calendar year.
Well said, sir. And a lot of people are pretty much planning for that time of year. Hopefully, a lot of our listeners are not sitting on a lot of losses, but if you are, they can work to your advantage this time of year, so all is indeed not lost. And I can, of course, recommend the OX Tax Keeper, Gains Keeper, I believe it's called, software. It is a nice, handy solution. You activate it once, and then it kind of comes through at the end of the year, and it calculates all of your forms for you, which if you've ever spent days, if not weeks, filling out a Schedule D, you know how beneficial that can be. And I'd imagine a lot of our listeners have that same hassle every year, so that certainly is something to check out. All right, thank you for that, Mr. Viceroy. And now we're going to keep on rolling because it is Monday, and he is at least mostly recovered from his oral surgery. We're going to dive right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
Uncle Mike, I know you're loopy on painkillers this week, so I really have no idea what to expect. If it'll even be options related, or perhaps you'll have one of your drug-induced flashbacks back to the days of the gridiron. Either way, sir, the floor is yours. Don't make me regret it.
I'll do my best. Well, I'll tell you what, just with the drugs that they gave me, maybe they should have given some to the Bears last night. That was kind of an ugly shellacking with which the Packers made. But nonetheless, what I want to go through today is gold, and just what I've been doing in gold lately, how I've been reacting to some of the price movements on it. Me and my good friend Alan Greenspan, who has no idea who I am, making the recommendation to buy gold now, and I just kind of want to go through just the trades with which we've been doing. So in looking at this, if you have a chart of GLD, go ahead and bring it up right now for the listening audience at home, because it'll kind of help you get a visual reference of this. So go ahead and hit pause on the podcast. Okay, now that you're done hitting pause, let's go ahead and go through it. So what I want you to look at is October 17th. On October 17th with GLD, you can see that the price is around the 118, 119 level approximately. And so at that stage, you can see the little run-up with which it's had going into that day. Nothing huge, but a little bit of a run-up. So going into that day from 115 up to 119, so to speak, the only position with which I was in at that point in time was I was just long stock, long put, basically, for quite a while, actually, from October 3rd all the way to October 17th, long stock, long put. So on that day, what I decided to do, I was waiting for some type of a pullback to either sell a vertical put spread or some type of a run-up to buy a calendar put spread as a way of financing the premium on the long put that I have for March. So on that day, I decided to buy a long put spread, and I ended up buying the November 117 put and then selling the October week 4 117 put against it. And so with that, what we ended up doing on that one, on October 22nd, we ended up getting out of the 117 put for October week 4 for a profit of roughly 32 cents. After that, we ended up closing out the entire position on October 29th. And so for all three of these, for these, this calendar spread with which we ended up selling an extra week to, we ended up getting probably maybe about a 20-cent profit. Nothing to write home about. But nonetheless, we're just eking away and we're doing stuff. We're trying to make things happen. So on that note, on October 29th, went to bed, just long stock, long put. And then on October 30th, looking at the chart, you'll see on October 30th, we're back around the 115 level. So in looking at this, this was to the point now to where I thought, okay, well, let's sell a put spread now instead of buying let's sell a vertical put spread instead of doing a calendar spread this time, because we have had a little bit of a dip and we have fewer deltas in the overall position right now because it's closer to the overall long protective put. So that was the decision with which to do a vertical put spread as opposed to a calendar spread. So on October 30th, what we ended up doing, we ended up selling a weekly. We were at probably about 115.5. And so we ended up selling a 114, 110 put spread. And I'm looking at approximately 50 cents for that. So on there, if you continue to look at the chart, holy cow, is that the wrong trade to do? Just trying to be upfront with everybody on this, in that I try to take credit for my wins as well as my losses, and this is one with which it obviously went against me. Now, the mark of a trader is not necessarily being right all the time. If I could be right all the time, you don't need to be a trader. You simply need to hire some broker to put in whatever you're going to do, and you're right all the time. You don't even need to trade. But we live in reality here, so let's go through what you actually do when something goes against you. Now, on November 4th, what I did with this, we were actually in the money a little bit on it. I actually took profit on the 110 put. I sold the November week 1, 110, 114 bull put spread. So on November 4th, I took profit on the long put that we bought for 20 cents, and then we sold it for 27 cents. That was step one of the roll with which I did. Now, at that stage, what I ended up doing was buying a Dees 114 put, and that created a calendar put spread above the current strike price. I'm bullish still. Not as bullish as I was, but I'm still bullish on the trade itself. So by doing that, what that did is it gave me the ability to sell premium in the front week, because on November 4th, it was a front week option, so I didn't want to buy the near-term short put. I wanted to sell the near-term long put, and I exchanged it, so to speak, or I rolled it to a Dees 114 because I felt volatility was more favorable there, and I wanted to take a few deltas off the table on this one. So what then happened is that if you look on November 4th, we went down again. And so with that, I waited 2 days. And then on November 7th, that Friday, what I ended up doing was getting out of the 112 put. November 6th, I rolled from the 114 put to the 112 put. Market comes back up, and then I roll to the 112 put. So now going into today, basically what I had going into Friday, what we had was the 114, 112 diagonal put spread. From there, we ended up rolling from the 112 put, as the market did go higher in gold, down to the 110 put for November. So with all that stuff that I just said, hopefully you can follow all that. I know that was kind of a mouthful. Looking at all of this in terms of the profit and loss between October 17th, unrealized, we've lost about 34 cents. Current position with which we've rolled to right now, we're in a Dees 110 put because I rolled down today from the 114s to the 110s on a dip, and we're short a Nove Week 2 110 put. So with all of that, this is a trade that has gone against me by about $5 in GLD. Unrealized, with everything that I've done since this started, it's down 34 cents. And this has a very realistic shot of being green by the end of the week based on that starting date. So moral to the story, folks, you have to do stuff. And I must say that this was a little bit more difficult than I thought it would, because this is the longest amount of time with which I have talked since last week. So hopefully you understood that a little bit. If you didn't, feel free to give me a call. I'll be more than happy to go through this with anyone if you'd like. And that is what we have for today, folks.
Well done, sir. Again, illuminating the point we've said here many times on this show. Sometimes you just have to do stuff. And it may be tempting to watch it grow and say, hey, I think it's going to bounce back. But yeah, sometimes you just got to do stuff. Speaking of which, in doing stuff, Uncle Mike, what percentage of your clients would you say are out there in GLD? Is this a large percentage of your clients that are doing this?
I'd say it's a pretty good chunk of the clients, but it's a fairly small position. So I would say, this is something, the fact that we're so hedged as we are, this is just kind of something different in that we have probably 40 deltas per 100 shares of GLD right now, and it typically rotates between 40 and 80, just kind of depending on what position we're in. This is usually something that I would put in the bottom section of someone's portfolio because of the fact that it's hedged and it's something different. And, who knows what interest rates are going to do, but this is just, I would say, maybe a 10% position of most people's portfolios, I would say, 10 to 20 tops.
All right. Thank you for that, Uncle Mike. An interesting examination of doing stuff over the past week. All right. Now we're going to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're watching, what we're keeping an eye on for the rest of this week. And not to rub salt in Uncle Mike's many wounds, but it is indeed not too many big names left to report, one of the few of them being, of course, CSCO, of course, reporting on the 12th after the close. That is indeed Wednesday, so we'll pay attention to that one. At least Uncle Mike, I'm sure, will. Other than that, not a heck of a lot of other really big names. Most of them have already reported, so we've already seen the lion's share of earnings season. A few floating around out there, but nothing too exciting. That said, there are some things still to keep an eye on. Perhaps, Mr. Viceroy, we shall start with you. What are you keeping an eye on for the rest of this week, sir?
I'm already thinking about how these markets are going to do in this last 6 or 7 weeks here. And I don't think it's going to be a straight climb. But I think S&P 2200 and NASDAQ 5000 are in striking range. I think, as we saw in early October, there are going to be some stumbles. There are going to be some pops, but the 10-year stays under 240. VIX, I think, will take out the 12 level, could quickly take out the 11 level, and we could have a nice year end here. To your point, Mark, I don't think there's much left in the way of earnings, but in terms of news, there's still shocks. I mean, what we saw in October was kind of the oil shock, kind of the European economy shock. Europe still has a lot of fixing to do, but macroeconomics, looking at the 10-year, looking at VIX, and if that 10-year stays under 240, again, volatility based on yield in our 10-year and in the German 10-year were pretty extraordinary today. So I'm looking at stuff like that, but I think we could take VIX 12 out on the run and then 11 and maybe finish the year in the 2200 level in the S&P. So that's what I'm focusing on.
All right, sounds good. And Andrew will give Uncle Mike another moment to rest his battered mouth. And what are you looking at for the rest of this week, sir?
I'm actually interested in this BABA thing. I'm looking at natural gas. gold. I'm wondering about an entry in there. I have been out of it for quite a while, since, golly jeepers. I don't know. My last doing stuff thing, I was never put back in. So I've just kind of been a spectator on the sidelines this year. But looking at levels there, maybe even the gold miners, it's just all that stuff. It just, I just think, it's a long-term thing anyway, but feels like there's a disconnect between all this central bank shenanigans that has not come to roost quite yet. And it might never, but who knows? I still think there is some potential for gold in that vein, although the deflation picture that keeps coming out of Europe and things like that, I mean, that keeps throwing cold water on it. So, but as a trade and some higher volatility, it looks like there's some decent juice to sell in like the GDX and stuff like that. Gold itself, I don't know about like directs downside premium selling there. I'd probably stay away from that still. Could be a little scary. So I'd pick a product that gives you a little bit more room, I guess, to maneuver in for that. But as I look at it, vol continues to come in more. That won't surprise me if we see, VIX as in VIX. We could flirt with breaking 12 if this kind of, if this kind of rallying continues. So it's not going to surprise me if it gets there by Thanksgiving at this point. So just fairly cheap vol, and I think a market that's searching for a reason to rally, because that's what it has been doing for the last 2 or 3 years. Just looks for a reason to rally and then goes, whoop, and on we go.
All right, Uncle Mike, I hope you're rested up. A few more bits and then you're done, sir. So what are you watching for the rest of this week, sir, in addition to all of your doing stuff out there in gold?
A bunch of things, and just in case for those of you, since I wasn't on the show last week, I am long a bunch of SPY calls again. We did get back in last week, so just wanted to put that out there on record for everybody. But the other thing that I'm looking at besides the SPY, and just kind of adding to what Alex said, in terms of what we can do over the course of the next 6 to 7 weeks, I would like to get back into silver again. However, it just keeps going down, and if you just look at the amount of time with the rapidness with which silver has gone down since July, it's been very rapid and very quick. So a lot of times when something goes down so quickly in silver, sometimes it can go up that quickly. I repeat, I am not getting any large positions in there at this point in time, but it's something that's on my radar right now, to where if we start channeling maybe a little bit in silver, I might get tempted.
We've been talking about silver a lot in some of our other programs, including our Volatility Views program, and what was going on out there from a volatility skew pattern in particular. And for a while there, both of the metals were looking like they were pretty much just like an equity. They were like an equity option. They were just straight up puts were bid, calls were offered, and that was about it. We saw gold kind of surrender that, and then silver as well, then starting to exhibit it a little bit again these days. I didn't look at it last week, so I don't know how the latest iteration of the silver skew was, but it seemed like there certainly was a lot of interest and perhaps concern to the downside in silver, and that's apparently been borne out by what we've been seeing out there in the marketplace of late. Silver not getting any love any time. So maybe, who knows, maybe this is the time for you to jump in with both feet there, Uncle Mike, the diehard precious metaler that you are. Not a fan of the mini metals, though, which is ironic, but that's a joke from a long time ago. And I think on that note, as we invoke Sebastian, we should wrap this show up. But before we go, as always, let me check in with each of my cohorts here, my partners in crime on the old ASP, see what they have cooking that may interest you. Starting off with you, let's go around the horn from Maine way. Mr. Rock Lobster, what's coming down the pike in the land of the pit?
We just had our webinar. Was hugely successful. Kind of a doing stuff webinar on selling puts and managing, using volatility to help manage positions, especially when you're trying to enter in new positions or put on, positions with basically, 2 legs or 2 legs. That is available at the Option Pit website for a small fee, very reasonable fee, probably save you some multiple of that by looking at the webinar. We are about to announce another webinar for November, and we will have a boot camp in December. So if you want to understand all the stuff we talk about on the show for a very reasonable price, the boot camp is the product for you. We had a great boot camp last time, and we'll be making it more better, basically about 6 hours of instruction for a very reasonable price. And that will be happening in early December. I believe December, the week of, it'll be like the 10th, 11th, and 13th. And that's what we got going on here on Option Pit.
All right. And Mr. Alex, before we go, a lot of stuff cooking over there in OX by Schwab land, including a big live interactive trader education event coming up over there in Schwab land. So take it away, sir, and give us some of the details on all the stuff you guys have cooking over there.
Yeah, I'll just give you sort of a snapshot here. Live event November 15th in Raleigh. That's Jimmy Rouzan and his crew. November 22nd in Houston, and then December 13th in Boca. Nina has a webinar I'll showcase on Thursday, the 13th of November, the walk limit, and she'll showcase the other advanced order features. Just a reminder, all the events here at Options Express are free. Come to optionsexpress.com, and you can get to the Educate tab without having an account. It's pre-login.
I like that, sir. You know, I'm a big fan of that here on the old Options Insider Radio Network. And before we go, let's check in really quickly with he of much dental work, Mr. Uncle Mike Tosaw. Uncle Mike, what's cooking over there in the land of RCM?
Well, it is as usual. One thing I'd like to remind people of is that come December, it's very difficult to want to talk about your finances because you're sipping on the eggnog and going to holiday parties and eating sugary foods. So before we get to that point in time, give me a call. We'd love to chat with anyone. Even if you feel you're a small-time investor at $500 a month, give me a call, 312-212-3531, or send me an email at mtosaw@rcmam.com, and we will chat before you get fat.
There you go, sir. Nice marketing tagline. Chat before you get fat. There are worse. I've heard worse things over here on the show. And I think with that, it definitely is time to wrap up this edition of the Option Block. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. If you haven't done so in a while, surf on over to the mothership, theoptionsinsider.com. That's where all of our good stuff flows from. You can, of course, find all those unusual activity alerts that Andrew and I are going through in much more detail, as well as all the ones we didn't have time to get to on the old program, a bunch of education, analysis, breaking news from the options market, of course, as well as all of the other many programs on our fine network. A lot for you guys to sink your teeth into over there at theoptionsinsider.com. And we'll, of course, see you right back here next time on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.